All right, good morning. Today is Monday, April 29th. April 29th. All right, we're looking at a silver chart, SLV, the ETF of silver. If you remember, what we did was we went long silver at 22.35. Remember that? Right in here. 22.35, right? We hit all three of our profit objectives, first one being 22.84, and that happened on the gap of this day right here. 22.84 was hit, and the second one of 23.13 was hit that day. Okay, and then our third profit objective was 23.33, and look at that, 23.70. So we nailed all the profit objectives to the upside. And on Friday, if you recall, I trailed up my stop. I took it up to 22.99, and then probably a couple hours after I did the video, the market did come down, knocked me out, but hey, that's still a good trade. Still locked in 64 cents on the remaining portion of my position. Okay, so that was a really good trade. All right, so the next one we are looking at, and I believe I did mention that on Friday, was the VIX, VXX. Okay, VXX, basically the fear index, right? As the market comes down, the VIX will go up in price. So what I decided to do is a very defined risk type of trade on this. Okay, I went long the VIX at $19. Now, of course, when you take a look at this chart, the trend is just obviously down because the market's been up, right? So the market's been going straight up, and the VIX has been going lower. So I went long on Friday at $19.19 on the VIX, thinking that the market's going to make some type of movement to the downside. I don't think it's going to be huge. I actually think 1563 in the E-mini futures contract, if we can pull down to 20-30 points from here, this VIX will pop. Okay, so this is where I'm long, $19.19. My stop, the low here, 1823 is the low that we saw here. Okay, so basically a close below 1823, I'll be out of this market with a losing trade if that happens. Again, I need to see the close below, I believe it was a 15th low. Yep, April 15th low of 1823. The VIX closes below 1823, I'll be out of this trade altogether. Okay, another trade that I am looking at, I want to outline for you a little here, is XXIA. XXIA. Now you see I have a weekly here. It's basically it's based on a weekly chart. Now, granted, on a daily chart, that you're looking at a daily chart right now, the trend was up on a daily, but right in here, the trend changed from up to down, and the market's made quite a move to the downside, a little above 19 down to 15.5-ish. Okay, but this is what I'm seeing. I'm going to show you a weekly chart in a second here. Okay, so the trend is down on a daily, and we've actually broken down through the 200 exponential moving average as well. Okay, but let's take this a step further and look at a weekly. Look at the weekly. What does this look like? Huh? This is a 50 exponential right here. So on a weekly, we're still up, right? Trend changed up here, pull back. We had some nice, nice trade in here. Let's pull back, 50 exponential moving average. Last week was a lower high and a lower low. Closed about mid-range, 16.12, closed at $16.12. So we're at a support level on a weekly chart. Okay, daily is down. Typically, the dailies and weeklies have to be in the same direction if I'm going to take a trade. But the reason I'm deciding to take a trade in this market, if it happens, let me outline it here and tell you why, is because on a daily, we've got two consecutive inside bars. See that? Look at the high. The high on Thursday is lower than the high on Wednesday, and the low on Thursday is higher than the low on Wednesday. And then on Friday, we've got another lower high and a higher low. So the market's really starting to contract, really starting to build that energy. So what I'm willing to do, since this stock is only $16 and change, I'm going to place a buy stop to go long 5 cents. All right, sorry about that. The bell just opened. The market just opened. I'm going long. I've got a buy stop at $16.28. $16.28, which is only 5 cents above. 5 cents above Friday's high. $16.28. And if that is taken out first, then my initial stop, the day of entry, initial catastrophe stop will be 5 cents below Friday's low. So it'll be $15.90. Okay? So I'm not risking a whole lot here. Okay? Go long at $16.28 with a stop at $15.90. $15.90 on a day of entry gives me a risk of only 38 cents on this trade. Okay, 38 cents. And the upside potential on this trade is much greater than the 38 cents risk. So again, XXIA is the new trade that I'm looking to put on today if it sets up, if the market is able to rally up through 1623 to 1628. So there you have it. So silver was stopped out. I'm flat silver. I was stopped out at $22.99. All my profit objectives were hit to the upside, and my trailing stop ended up making 64 cents as well. I'm long VIX at $19.19. My hard stop on this is a close below 1823. And I am looking to put on a trade at 1628 on XXIA if that happens. So have a good day. And before I let you go, I'm real excited about, go to Options MD, okay? Doc's got 3 videos up there now. 3 videos that you can watch. OptionsMD.com. 3 videos. Put them out last Tuesday, Thursday, and then last, the weekend, Saturday, he had a great one too. Options MD. And that mentoring program is opening up tomorrow at noon. Tomorrow, the 30th, at 12 noon Eastern Standard Time. And it will be the first and only time that this mentoring program is open this year. We will not be opening it again until next year. So this is the only time Options MD will be available this year. And it will only be open for 4 or 5 days max. All right? So hope you enjoyed the video. Hope that helps. And if you've got any questions, let me know. And again, be sure to go to optionsmd.com. All right? Have a great, profitable day. Bye for now.